Hey all, welcome back to Chip Stock Investor. Today we're considering a couple of companies that play in the photonics and networking portion of the semiconductor industry, Lumentum and Fabrinet. One of the most important things when you're looking at two companies is to understand how they differ from one another, how they're comparable to one another. And what we use every day when we're doing this is Fiscal.ai. They have some fantastic tools like this right here, looking at the revenue segments between these two companies, Fabrinet and Lumentum.
Yeah, this really is an incredible tool. It's a feature that is available very quickly right after a company reports earnings. So you don't have to wait or parse through the earnings call transcript right away. Fiscal has these KPIs out for businesses, oftentimes within just a couple of hours. Super important tool to help inform your investment allocation decisions. So we're going to talk about these a little bit later in the video, breaking down the revenue segments of Lumentum and Fabrinet. Before we get there, remember to check out Fiscal.ai, and you can get 15% off any paid plan if you use our special link, Fiscal.ai/CSI.
We'll focus on Fabrinet and Lumentum today.
Both companies had earnings, but per usual, we don't want to just do an earnings review. That's a pretty commoditized thing these days. You can even just plug those reports into your favorite chatbot and get a review of the earnings. Let's go a little bit deeper because both of these companies, as well as all of the optical and silicon photonics companies in the last year, have been on a pretty epic run, like the memory stocks. So we'll talk about what's driving the momentum for these companies and if it's too late.
Fabrinet does package up some of these optics, some of these photonics. And so they fall into that contract manufacturer part of the industry. Lumentum is an integrated device manufacturer, meaning they design these systems as well as components to the systems, and then they also manufacture, which we'll talk about here in just a moment.
Like a lot of IDMs these days, Lumentum does have some hybrid where they do some manufacturing in-house and farm some of the manufacturing out. And one of the companies they utilize for packaging is actually Fabrinet. So that's the relationship that's there between these two if you're trying to figure out how the supply chain works.
And be good to point out that one of the biggest peers or competitors to Lumentum is Coherent.
And of course, Broadcom.
Yeah. In this part of the supply chain, we're talking about the light sources, the lasers and the LEDs that work in the photonic systems in networking data centers with each other.
As well as the transceivers. When we did that video in December, a lot of these optical solution companies, be it copper or actual optics, lasers, silicon photonics, there's a lot of steps that they handle in-house. So they'll actually make the wafers. For example, their indium phosphide process, IMP wafers, they handle a lot of that in-house. And then they also dice those wafers up into chips and make things like transceivers. Those are those plugs that you see going into a network switch that connects different servers together or different racks together so that the GPUs in an AI data center can all communicate with each other.
And what exactly is driving the growth of these businesses? This is from Lumentum. Cloud and AI business drove the Q2 total company revenue up over 65% and expanded their operating margin by 1,700 basis points. Let's break that down a little bit more.
More revenue for Lumentum. This is another company exhibiting positive operating leverage. So as that revenue increases, 400 million a year ago, 665 million in this latest quarter, see the margin increases that are ramping up. So gross margin, 36% versus 25% in the same quarter a year ago. Operating income on a GAAP basis was actually negative, almost negative 13% last year, now almost positive 10%. So it's that twofold thing, the two pillars of a growth story for a business. It's not just the sales growth, but also as the sales increase, you want to see profit margins increase. And that's what's happening here for Lumentum. That's why the stock is doing pretty crazy looking things. It was not such a profitable business not too far in the past. Now becoming a robustly profitable company.
And just another way to visualize this here, the life cycle over the past few years goes back to 2016. You can see the changes in revenue and in their operating margin. And I think, Nick, as you mentioned in that most recent article, general costs, operating costs, fixed costs relatively stay the same. And so when this revenue increases, the margin increases significantly.
And there's a lot of other moving parts to this as well. This optical and silicon photonics market has been kind of messy. Coherent has been a big consolidator of that market over the years, as has Lumentum. But Lumentum is actually half of a company that split, a company called JDS Uniphase, split in two over a decade ago in 2015. Lumentum is one half of that business. So kind of a newer company, technically, that was created here. And so they're still unlocking operational efficiencies, making bolt-on acquisitions as time goes on. Optical and photonics are a growing important piece of AI data centers. So two products ramping up. We've talked about silicon photonics, co-packaged optics back in December, CPO. The one that we didn't spend a lot of time on is a type of networking switch, specifically optical circuit switches. So these are what those transceivers with the optical cable plugs into that helps connect different devices within the data center, OCS. These things are ramping up. There's a big order happening the second half of 2026, worth at least a few $100 million. And then the co-packaged optics, CPO, will start ramping up, especially in 2027. What's really crazy here is Lumentum have all this momentum up to this point, but it actually doesn't look like it's finished.
Yeah, it still allows some room to run. This is their guidance for just next quarter at the midpoint between 780 million to 830 million at the midpoint, 89% year over year growth in revenue and the operating margin jumping.
Yeah, pretty significant. So this story is definitely not over. Here's the revenue. You can see we are now well into all-time high sales, all-time high adjusted net income. And net income, it looks like we are going to continue that pace here for a while. So we hinted back in December, we were looking at taking positions in Coherent and Lumentum, and it's high time that that happens.
So let's now talk a little bit about Fabrinet. As you mentioned, Nick, at the beginning, Lumentum partially uses Fabrinet to produce some of their systems. Fabrinet does a lot of contract work for a lot of different companies. And so they're a bigger company, they're broader.
They're a contract manufacturer.
Let's go over their performance and compare them because this is one that we said that we were also interested in. So revenue for the quarter, 1.14 billion, 36% increase year over year. Their operating margin, not as much expansion since last year. They're a manufacturing company, so that changes things significantly. And here's what that looks like visualized with their revenue and net income on an adjusted basis.
Yeah, if you think about why that is, why would a company like Fabrinet have less operating leverage? Of course, they're going to have a lot of fixed expenses. They have to buy equipment. And so that means depreciation expense. But because they're a contract manufacturer, more variable expense because of cost of goods. You have to buy raw materials. You have to buy different items, parts and pieces for maintenance and ongoing operation of your factory. Your labor is going to be a bit more variable depending on how many customer orders you have. You may have to expand or contract your employee base. So basically more variable expense, which means less operating leverage for a company like Fabrinet, which is totally fine. It just means it's a different type of business model than a company like Lumentum, which has more fixed costs currently in its operations.
And then here is Fabrinet's guidance for the third quarter. Revenue range 1.17 billion at the midpoint, which would imply a 31% year over year growth.
Pretty good.
Can't be scoffed at. 31% year over year is not bad. But let's take a look at the revenue segments or how this is broken down for Fabrinet, and then I'll show you one from Lumentum as well. You can see that Fabrinet has become, especially in the most recent quarters, much more diversified in what type of systems they're providing. Mm-hmm. The red is high performance compute. You can see that that's growing. Datacom was their biggest revenue segment. Telecom now is their biggest. Data center interconnect also growing. That's in orange. automotive in purple, industrial laser in green, and then other is the yellow.
Industrial lasers. Yeah, that's interesting. If you're wondering what that little sliver is, Coherent and Lumentum also have industrial lasers. A company like IPG Photonics specializes in industrial lasers. It's a bit different. It's still semiconductor technology, but it's not lasers used in communications like in a data center. It's more lasers used in industrial applications for cutting, for polishing, for welding. So high power lasers for basically manufacturing, let's say that to keep it simple.
And then let's take a look at Lumentum's revenue segments. In fiscal year 2024, they simplified this. It used to be broken up into lasers in red, consumer and industrial in green, and then telecom, datacom in purple. Now it's just components revenue in blue and systems revenue in orange. Blue being the laser beams, orange being the OCS switches that we showed you earlier, and then co-packaged optics. Both of these segments are growing at a very rapid pace.
Yeah, I think that makes sense. The components revenue, it could be laser sources for data centers, for communications. It could be laser source for industrial, but it's simply a component. But the orange part, it's the whole system that they're selling, like an actual network switch or a co-packaged optics system that gets shipped off to TSMC for a full Nvidia or Broadcom system or AMD system.
So here's what the stock price has done for both Fabrinet and Lumentum since almost a year ago. This is spring of 2025. Fabrinet up 127%, Lumentum up almost 600%. Lumentum was stagnant for a long time.
As was Coherent, these companies also having an Nvidia moment in the last year. They were very small businesses before because there was very little profit. There was no real solid growth direction. But now with optical becoming a more important part of AI data centers, suddenly there's this growth catalyst. This is another one kind of like SanDisk where it was probably egregiously undervalued given what was coming a year ago when they got spun off from Western Digital. Obviously, it's no longer cheap. Same with Lumentum. This has turned into a momentum play. These are still going to be cyclical businesses, but there's obviously a lot of momentum at the moment because of what's happening with the hyperscaler build out. So of the two, what do you think?
Of the two, I like Lumentum.
I have to agree. Fabrinet, not a bad business, obviously also riding great momentum, contract manufacturer, so it's going to have more customers, more diversification. But yeah, I think Lumentum and Coherent probably need to just start those small starter positions and then just leave them alone and continue to monitor what's happening. But that's what we're looking at personally on that front. We'll see what unfolds as 2026 gets underway. The party kind of briefly paused the last 2 days, but stocks are going to do what they're going to do on a day-to-day basis.
If you want to take a closer look at some of the other companies that are in this space, in this part of the semiconductor supply chain, make sure you check out this video right here on how to invest in the semiconductor industry in networking and silicon photonics and optical.